And away we go. Welcome traders to the Bookmap Academy meeting every Thursday. Market close, we'll go through coaching and mentoring. And the program is here in our Discord channel. So if you're interested in it, it's open to everybody. You will need to sign up for it. If you're interested, go to bookmap.com. Then you click on the More button here, and then go to under Community, go to Bookmap Academy here. Click on that. You can apply right here. And I'll just briefly go over it. I know that everyone here in Discord knows all about it. Let me just, for others, let me explain it and clarify a little bit here. So when you apply, what you are applying for is to the Junior Academy, Bookmap Junior Academy. So you start creating content, and we're going to go through that content in this meeting and give feedback on it. Open the mic for you and let you talk about like what you were thinking, why you did this, and then we can all give feedback on your content. That's the coaching and mentoring part of it, as well as in Discord. We do it all day long. Everyone is putting their content in there and giving feedback and advice and having discussions. So it's a win-win in that regard. There's another one on top of that. If you create good content and you meet these thresholds of quotas, and the quota is very simple. It's just one piece of content per day, and then you put it in your journal. If you do that, then you will be invited to the Bookmap Academy if it meets the qualitative and quantitative threshold. And then it's kind of a trial period at that point. How well are you doing? If you continue to do that, we will then invite you to the Bookmap Academy. That's where you can get Bookmap for free every month. You'll need to continue doing the same process, but then you'll also get the MBO, not the bundle here. I need to fix that. It's Stops and Icebergs is what you'll get for free as well if you double your quota. The next step after that is to become a coach, and then you'll be giving feedback to others. You'll get data for free as well. The next step after that is you can work your way up to becoming a Bookmap streamer. Okay, so nice kind of progression here. It's all free. It's all included. You will just need to have Bookmap, of course, and start documenting your trading activity. That's it. So if you're interested, just click on the apply button and you're off to the races. All right, so let me go through disclosures, a little bit of news, and then we'll jump right in. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. A bit of news, we've been covering this, but it's still valid here. Join our beta programs. Just email us at beta@bookmap.com. We have this new tool for multi-account add-ons. You can connect to these evaluation or prop trader services and trade multiple accounts through them. There's also a new pace of tape that from the Market Pulse add-on that we have. And there's a pace of tape and balance as well. Get access to that and also get access to our Market Pulse web tool. I highly recommend that you do, because this tool is pretty great. It will show you the stock indexes and the Magnificent Seven individually as an index, also as a heat map index for various algos like volume pressure imbalance, and price change. So these are really powerful things, and they're all free. Just email us at beta@bookmap.com and tell us what you're interested in, and then we can give you access. The Blue Jacket competition, this is also a part basically of the Bookmap Academy. Just tag it in the take your content and put it into the Blue Jacket room, and this will start on November 10th, so get ready. It's November 7th right now. You might as well get credit for this as well, and maybe you'll win 3 months of Bookmap. So that might help you along the process through the Academy. And then these are our Academy meetings every Thursday. So that's that. All right, so let's turn it over to David, and we'll go through some of his coaching here. So David, take it away.
Perfect. Good evening, good morning, and good afternoon, everyone, including yourself there, young Dan. I've got 3 tonight, as I put in the chat. Let's have a look in. I know Alan's in. Shall we start with Alan? I definitely saw Alan up there, and I imagine you're still in New York, Alan, although you'll correct me and tell me you've moved somewhere. Yeah, some cheeky trades, some cheeky NASDAQ. Good you're back on the NASDAQ, Alan. You're away from the coin. So,
excellent. Okay.
coin. So got a couple for Alan to have a chat through, and these are trades of last week, Alan, from your spreadsheet.
So Alan must be away. You're invited up to the stage, Alan. So just accept. Hi, Christophe, Caesar, Valet fan, welcome, Rob, and John.
And John.
Yeah. Laura, Mr. No Luck, Malek.
There's some new traders here, I think.
Yeah, we don't hear you, or you got to first join the stage, Alan. Anyway, let's just jump in.
Yep. Yeah, sure. Here we go.
There he is.
There he is. He's turning his disco lights down, aren't you, Alan? Or maybe not. Anyway, let me crack on this one. So this is a trade into the London close. You know me, Bruce. I love to sort of focus around the time of day. So it's approaching the London close. You know, setting the context, the price has scooted down. There's a little trade going on just after 11:15. We'd be curious to know what that was about from Alan. But the key trade he's highlighting here is that failure to push lower just after 11:15, and then he can see VWAP further up. He's thinking that as a target, as an exit. He's looking a little bit at some of the volume profile and chasing the price up. Good entry. Obviously could have been a little bit earlier, as we had a really nice red and green bar round about, I'd say about 11:17, Bruce. You know, got that spike up in volume. The price scoots off, a little bit of stops going on. I would say nothing too material for that time of day. Others may beg to sort of differ. And then he takes his profits pretty much on the VWAP line, which is, yeah, a lovely little trade, Alan. Really, really a nice little trade. Can you hear us yet, Aaron?
You're muted, Alan.
There's some static noise on my end, is it?
You hear me now?
Yes.
I can, buddy.
Those purple trades on the bottom are just, I had a trade on them before and just practicing, and it turned I don't know, like crap. So just ignore those. So it's not the.
Okay, I thought that was the case. I've changed my mic for Mr. No Luck. Hopefully that will. I've got the hopefully that won't be as bad. Sorry, Alan.
Yeah, I think I'm not doing competition or not. Yeah, well, this one, like I was just watching like the market. They kept trying to pull it down. You see, I put all those arrows like from book sweeps. You see, like there's like 4 arrows all the way on the left, like above 11:15.
Yeah.
So like 1, 2, like 3 times they tried to pull it down, and they couldn't. And then the buyers stepped in pretty quickly.
They did.
And I could have entered with that where it says 31. I wasn't so far away where it says 31 the stop run, but like I don't know, I waited for a little more confluence, and the market pulse goes off, and then you got a little bit of consolidation, but it's mostly green. So I wasn't so uncomfortable staying in the trade because it's mostly green, consolidated, and then I mean no one knows for sure, but I figured that since the bears tried so many times that the bulls will come out of this one as the winners, by knockout.
And you've gone back up to that VWAP where it left from on the left-hand side of the.
Exactly. Yeah. If you all exactly where the exactly.
So
Like you
a little dog walk. Were you minded that it was getting towards European London close, or you don't give a damn about it?
I don't look. I don't care. No offense.
It's okay, man. It's okay.
I actually have it on an alert on my phone. It says London close, 11:30 close. But I don't know if I see the trade. Why it has like the volatility at the end?
Yeah.
No, I don't really know. I just look for like the market conditions. If it just happened to be coincide with London close.
Sure.
It was, but
That's fine.
so I don't know. Maybe this is good for other traders to see like where I entered. Because a lot of people were asking yesterday, to market everyone like, oh, the market's shooting up. I don't know, 500 Nasdaq, whatever. But where do you get in? Like you have a speeding train. Like where do you hop on? So
Yeah,
you see my entry. Yeah, my entry.
We chatted on Skype about it, weren't we? Exactly that yesterday, I recall.
Yeah, so there's my you see my says my entry long. So like so a lot of people like were asking I said eventually there's always gonna be a pullback, it doesn't have to be a major, I imagine this, these first few lines are going down and up. I imagine it's profit taking because the bears really wanted it. They had a few chances. They came down really hard.
Yeah.
And and I just realized the selling just started where the VWAP is, and it's just amazing. Like usually I put in my notes, where else can you see this besides Bookmap? And look, it's like that's the first standard deviation. When it sold from there, and it didn't go up as smoothly as it went down. No. But in any case, it's just there's no liquidity like underneath the price. It's just liquidity where I pointed the arrows. And there's the value area was like, and this trade was a little strange because usually the value area is like in the middle of the chart, but this one was all the way up where I put the little green square. So that also,
I love it. It's that scoot. Saying it again, really, it is that scoot down price discovery. Let's say in a steaming market, volume picks up just after 11:17, let's say, and you know where they're trying to go. There's a little bit of liquidity, as you say, at 26.50, and there's a little bit at 26.4, 3 round about there. So yeah, it's a one-way bet. Love it, Bruce, sir. Catch us Monday morning quarterbacks.
I put my see on top where it says exit TP. That's my read the whole paragraph. It's my Bookmap promo.
We like the promo.
Or I wrote that for Bruce. Exit, take profit.
There you go.
Don't you love visuals? I misspelled it. Damn. Sometimes it's hard to get everything in the real estate, and sometimes one word. But you get where else? I'm not saying you just kiss butt, but it's where else do you see it like that? And exactly to the view up. Like after that, I think it came back down profit taking, but exactly to the VWAP. And after that, I don't care, but seeing the value area so high up also maybe second to pause. And like there's standard deviation. I mean, the VWAP, the first standard deviation VWAP, and would that be called the high volume node or just value area? The HVM on the SVP.
Where under SVP
is that considered a high volume node or just value area? What would you?
This is here's your high volume node here. It looks like to me.
Yeah. Okay. Yeah.
Yeah. I mean, you got a developing one here, or kind of zone, but
But the bigger one's up. Like usually there's one lower and there's a higher, but this one was up. The VWAP was there. The momentum was there. You could see on the bottom like there's some green bars.
Nice.
And a lot of and it just I could have hopped down a little earlier, but I don't know. I rather.
No, that's
what I need to get better at. Just getting in sooner, and make sure you have the right stop loss. So you get in sooner, you get stopped out. It's not a big deal, I used to make it a big deal. I used to hate getting stopped out, but I made a sheet. I laminated it, and it says "Stop losses are your friends," and I taped it all over my computer. And once I stopped it, huh?
Go to the screen.
it's kind of liberating once you like come to the acceptance that you're going to be losing. And because when I kept going in, I didn't want losers, didn't want this, and it's I put more pressure on myself, But when you have the stop loss in place, and you felt enough pain from not having it in place, because we always think we're smarter until it happens to us. So I finally got the point where like I don't care if it
That's the
hits
spirit.
stop loss, because that could save me a week of work. If you're stubborn, you thing goes down. It could be a whole week of profits down the toilet. It's not worth it. So
No, definitely not.
Yeah, I mean, I think any kind of feedback. I mean, first off, Alan, like, um, I think last time we spoke, uh, you've gone over this trade so many times. We've seen the same image multiple times. It almost looks like you copied the same one from last month and the one before, etc.
yeah,
Check that, shouldn't we?
Which is great. I would though still encourage you, just try it next time to put together a small checklist, what you're looking for, and I think that would help you maybe with your setup. I don't think that this is out of control at all, as you're getting in too late. I think it's fine, to be honest. I know your trading size. This was probably the competition. Is that
there's
right?
competition because
Yeah.
on the bottom right it's
Yeah.
EOS.
Here yeah. I mean, you can see the sweeping, or you getting slipped.
Yeah, I can always
Especially
competition.
Nasdaq.
Yeah,
But I really like and another thing too, like there is high liquidity in here getting filled all the way down.
yeah.
So
Mm-hmm.
you do have it, and I would put this into your checklist.
What? But there's
That the passive buyers are getting filled.
usually at the checklist, I would say, like usually where these trades, the short squeezes or mini versions start off with a really big sell stop run. That's what I would do. Step one, see stop run, like large stop run, not like a little one. Like you want to see like it fall off a cliff, because then it'll really like give more fuel to the buyers to because you're squeezing so many people out at the same time.
Yeah.
So my first step is like look for a stop run in either direction. Then second step, like wait for the reaction, and then based on there, yeah, I mean I could do that, but maybe I could do it in more detail and just like what is tomorrow?
The checklist on your next chart, Alan, isn't it?
Yeah. Yeah.
Huh?
Put it.
We'll look at that in a moment.
Put that into your checklist, and in fact, do it for tomorrow's webinar, and we'll go over an image of yours in tomorrow's webinar. But you got to put that checklist together.
No pressure, Alan.
No pressure.
No pressure.
A checklist
No pressure, buddy. Yeah, there's no go to who does later. You got to do your checklist. Yeah.
And I don't know if people notice the correlation track. I think people take for granted, but it really helps the
Nice.
the blue line. It might not sound like anything fancy. This doesn't light up like Market Pulse, like with speakers and all that stuff. But like they're pretty much positively correlated, and you don't have to go back and forth between heat maps. It's all on there. I think like there's a lot of simple tools in Bookmap that you don't have to always like reinvent the wheel. There's a lot of tools, and I know you're always adding more stuff. There's a lot of just tools already existing like that you need. And I'm a believer, like just find the few things that you look at and that works for you, and stick with it. If you start trying to do too much to this, you get you freeze up, and it's just.
Damn, Alan, you are the brand ambassador tonight. Respect, sir. Respect.
I should get a hat, a Bookmap hat. Yeah,
We should. should we segue to your next chart, please, Bruce? The next one for Alan. So
Yeah. So let's see. There was just was there a couple more things in here? No, I really like what you said about the reading the selling pressure. That was really good. You're reading that. I think maybe just combine it with the liquidity, because that and here sellers hitting it, sweeping the book, sweeping the book, sweeping the book, not getting traction. And then all of this buying coming in. This is your flag pattern here. It's a beauty. And you nailed it. And you got in with some size, and you got out with some size. Beautiful. So
Yeah. What was
yeah.
it? Oh yeah, the second date. I think I made $500,000 that date.
Way to go.
But I couldn't beat the $2 million guy. Whatever.
Yeah. All
So
right.
Maxime said it wasn't an algo; it was actually a person. So if anyone thinks it was an algo,
You can see
he said it
trading with
was
his
actually a
mouse.
person.
Yeah, it was. And then, but the second guy, like, I think he traded, like, I don't know, close to 30,000, contracts or something. So that was an algo. I'm pretty
Yeah.
sure. I'm pretty sure.
Here I have a checklist.
Ah, there you
You
go.
do. So
Oh,
this is a
look at
news
that.
trade, Alan.
Is that
I
how you
love
want
it.
it?
Love it. I mean, it's
make up-
beautiful, Alan. You talked about it. I love the failure at the top. This is perfect. This is. I'm gonna say Stephen. Stephen will say no, it wasn't me. It may have been Vinny, but we've had some of the news trades over the month or so. Let's say in the reverse, where the prices it's scooted down, and then you get that higher lows, and off it goes. So over to you, sir. Grab the mic.
Yeah, I mean, I didn't expect the fall to be so steep. Where did I enter? Yeah, look, it came down, came back up, came down, came back up. I mean, look at that red line in the middle of the screen. It's just like shot straight down, and the bears. I was just following the patterns. Usually I don't want anyone to take this like it's not like fact, but usually like if I like 4 times, like 4 tries, like after 3 tries, you start to look like okay, they can't do it. The fourth one already, I'm like, oh, yeah, they're not doing it. But that's not gospel. Anyone just don't blame me. So I waited 4 times and then I lost. Whatever. But yeah, I pointed out on top. It just can't. The arrows on top, yeah, just showing how it. You see the 2 hours on the right. Oh, more. What is it? Where there's like a green with arrows. It's like touching the green right there. Yeah.
Yeah.
So it's like it's exactly to the liquidity point. Exactly. Like
Yeah.
again, like Bookmap. Like here, there I highlighted.
You got liquidity coming in, some bullion, and I
Yeah,
think
Bruce,
large lotters in there as well, Bruce.
Hey, this if you all read that, Bruce, that paragraph where it says buyers seem to trap. That's for you.
Yeah, beauty. I love it.
But it's true.
It's true. It's exactly true. Just as a side note, just look at some of these things, and like maybe this helps in some people's trading. Oh, there's a flip of the order book here, trades into it, and then flips to the other side from offer to bid. But then this in here turns into kind of a really interesting line, high liquidity, but there was
data.
There's data though. So what does it do? It tests the swing down here, and then but then it continues to kind of bounce here because of this liquidity level here. And
a round number.
And and your round number, absolutely. And then you read it right, like again, very similar to the chart you had before of the attempts, but they just can't seem to do it. So,
but the opposite way, the opposite direction.
Right. And maybe you get in a little. I mean, this is armchair quarterbacking. I mean, getting in a little early, but I mean, heck.
No, I'm happy with that one. Look how it went down right to that little line of liquidity. It's not even a big resting line. Yeah,
well,
just a little line.
Balls here, Alan. You're in too early, mate. Come on.
Yeah, I need to hang out with David more.
No, it's great. And I really like it that, like David was saying, you're taking some of these fundamental or trading some of the news in here and using some of these same ideas with liquidity.
And I also looked at the value area. This one has 2 value areas. The lower node under the SVP, the lower node, and there's the
lower node where, here or here?
Underneath, where they're 218, 214, where it sticks out to the right. That's the lower one. I call the value area. Right there. Yeah, and that's the upper one.
Yeah, this is the upper one here.
Yeah, I didn't label it, and
And
there's a
here's the
lower
lower
one
one
too.
here. Right. Okay.
So I think
Gotcha.
that's what that was part of my confluence, that there's the markets on top is not, they tried to, they're not the bulls aren't taking it past the any higher, and there's a low volume, just sitting there waiting for me. It says like, come to mama. I was like just come here, and look, it just goes right to 208, right?
Yes.
Right to the thing, and then I don't know what happened afterwards, but I imagine at some point it went back up to the and and what was good as this is that well, no, actually no, it
Well,
was
let,
crashed
let,
out.
let's go through your checklist, or so why don't you go through each point?
All right, so there was a news. What day was? I forgot what day it is. 31st. There
Oh,
was a
wait,
news
last
release.
Thursday.
Yeah, was that CPI or well, but whatever it is, it comes out, and then there'll be a violent reaction. That's where they advise. I used to, when I first started with like Top Step, whatever. I'm like, why can't we hold during this and that? And I realized, well, don't hold during news and see what happens to you. So everything, all the rules they told not to do, I did, and but there's a reason. Like, this, like, you don't want to be in the middle of that, and I like to wait after news release, like 2 minutes, like give it like 2 3 minutes and see how it's
Okay.
reacting.
So
But here I gave it,
that's
what I gave it,
point
like, I gave it
one.
like 5 minutes. I gave it like 5 minutes because it shot down, and then it shut up. Then suddenly, like, there, I didn't know what to do. What did I write? I waited for the reaction, listened to Market Pulse. Yeah, Market Pulse was it was going back and forth, but then it was mostly bearish. Uh, and then, oh yeah, then I had to look where the value areas are.
Yep.
Right there, and then see the rest of the liquidity. That's where I showed you where I got out on the bottom. That is just a little yellow
Yep.
line.
Yep.
And if there's rest of liquidity below, Market Pulse is bearish. There's a lower value area. That's 3 confluences so far, and I went short there.
Yep. Okay.
Is that what you're looking for? Something like that?
Yeah, I mean, so like I think just the more that we know what we're looking for,
Yeah.
and we're kind of more clear on it, then the more automatic it's going to come. The more
Yeah.
often you'll see it, the more you'll know how to react to it, and you know what you're looking for.
Yeah. I mean, I know everyone, like, says, each trade looks exactly the same, but like Jack loves it. He says, no, that's not bad. That's great. Everything's the same. Like, he loves that. So, but there are subtleties to each one. Like, I'm gonna try and like look. They're not all the same. But like, say, all the thousands of hours of screen time in this, you kind of have a like peripheral vision of like what should happen next. Sort of, like,
Yeah.
and that stuff that I take for granted. Maybe I should type it out a little bit more, because it's just I just run out of space sometimes on there. Honestly.
Yeah. Yeah. Um, yeah, no, nice work, and
Yeah, but that
similar
entry,
things with fundamental data. You know.
and that entry at that entry, like right where it went down again. Well, it could have been a little more, but like it looks almost like the pullback. There's the pullback entry down. Yeah. So I would say to
That's really
everyone,
good.
on days like yesterday, just the big question, like yesterday, even though it was going up, I went long, and I got a loss on a pullback. So it's usually you have to wait for a pullback, to be complete, and then wait for buyers to come in.
Yeah.
That's how you
No,
did
I
like
like it, Alan.
yesterday.
Like it. You're definitely, I feel, trading with more confidence than you have before.
Yeah,
No,
and look at the time in sales. Like, I didn't put a box over it. I should have. But 105 contracts. Mine is minimum 40, and in Nasdaq that's a lot. So you see 105, 40, 45, 43,
yeah.
and since the red ones were like even. No, actually, I don't want to do that. I would say hedging, but no, I don't know. No, forget that. Scratch that. It was just the last four. At 742, at 753, 809, 810. Like, they're not like one after the other. You see like 10 minutes apart, like 10 minutes, and then it explodes. The last two explode up, and then that's it. There's no more sellers coming in. There's nothing. It's just exhausts out.
Nice. Very nice.
Yeah. Yeah.
It is more of a news trade, I guess. Yeah, I just they always look the same because I always look for the same things.
Okay. All right. Well, yeah. That's good stuff, Alan. Let's move on. Let's see. So we'll move
Thank you,
on
Alan.
to
Thanks,
see.
guys.
Yeah. Thank you, Alan.
Yeah. Chat soon, fella.
Is CMJ in here? No, he's not. Okay. Let's
We've got
see.
Christoph.
Christoph is here, but he doesn't speak English, but that's fine. We'll go over his stuff,
Fine. Okay.
and yeah,
Brilliant.
Take it from there.
So this is trading from yesterday, which is fantastic. So it really chimes with what Alan's been talking about now. So good stuff. Some lovely charts here, Bruce. As we'll see, we've got this first sort of chart, which is if I call it the trading window, that you can see what he's doing with his entries, doing with his stops, doing with his TPs, etc., etc. We've then got another chart, the next one down, where he's got, if I call it a checklist that's going on, so he's explaining what he's doing. And then his third chart is really good. This is the context of the day. So he's laying out what's on his mind, what he's feeling, what he's thinking about, what's happened overnight in the overnight session. So really good battle plan. And maybe you want to perhaps bring that one up first if possible, Bruce.
Which one?
The third chart that he's got. So it's the bottom.
This one?
That one there. Yeah. So really, I mean, 10 out of 10. He's laying out his match plan, his game plan, his battle plan, as we can see on the right side. And I think this came out of Discord, so I'm sure everyone's actually sort of seen these already. And it's just great. It's just laying out what's in his mind. This is really good practice, Bruce, as we all know. I don't do it as much as I used to because I try and get a bit cocky and try and keep a lot of it in my head, but I do also write things down, bit sort of pointers for the day. The danger I'll say we all sort of face is making sure you don't get yourself blinkered in terms of the market's going up, as we've talked about before. I'm going to lean into Crash. I know he's not on the mic, but you've got to trust your instruments. You can have a view of where it's going to go or where it's not going to go and how it's going to get there. Looking at some of the comments in the chat, but you have to trust your instrument. You've got to trust your charts and everything else.
Let's bring Crash onto the stage here and give us some piloting.
To bail me out on this one. Yeah.
Trust your instruments.
Hope it's a Crash.
If you're free, Crash. In fact, we're going to go over some stuff from you, but I didn't see anything. So if you have anything, let us know. Anyway.
Instruments, Crash. Instruments. Good evening. Good afternoon.
So yeah. Well, Crash. I mean,
can you hear me?
Yeah, we can hear you.
Yeah,
okay.
we can.
I was just checking. Now, sorry, I didn't know if you wanted me to say something or not there.
We want information on trusting your instruments.
We do. Put you on the spot, buddy. It's okay. No, I was just reiterating the point about not getting yourself blinkered in terms of where the day is going to be, and you're adamant this is going to happen because of something coming out or something that's happened, some news. In the meantime, the market goes completely in the opposite direction, but you're so set on what you thought your plan was going to deliver that it's a bum day, so to speak. So that was my theme about trusting your instruments. That was all.
Yeah, I mean,
so
I kind of think I would imagine I mean maybe another time or if you whenever you like Crash, but like I would just imagine that your piloting experience and the way that you're looking at confluences is probably pretty equal. Looking at instruments, this, that, whatever, checking, scanning, and then same kind of skills you're probably using on the chart. I would think.
Yeah, exactly. Can you hear me okay now?
Yes.
I'm having some microphone issues here. Yeah. Okay. Yeah. I mean, it's. I think it's completely relatable I think you need, the exercise that you guys do in here about creating a checklist and having specific things you're looking at, right? If this, then that. And you just have to learn to trust the instruments. Sorry, my phone's going off. And if you're at night in the weather flying, you have to trust the instrument because you can't see exactly what's going on. But there's this thing called the giant hand phenomena. It makes you feel like you're turning left, uh, and you may not be turning left. You might be straight and level. You might be upside down. But there's these forces that kind of just push you around, and you just have to trust the instruments to not take that head fake, not think that you're actually turning when you're not turning. And it's so applicable because if we get in trading a mindset that we think something's going to happen and we just are relying on that more than what we're seeing price action actually do, right? And so you have to trust the yellow brick road that I like to say that Bookmap is providing for you, and just follow it, because preconceived notions, that hope can kill you.
Yeah, very wise words and a good analogy comparison for sure, Bruce. I think so. Yeah. Great stuff.
Crash, if you have anything, put it into the academy, post it in there, and we'll go over it. So I just didn't see anything from you recently. I don't know if you do or not, but
yeah, I got some stuff. I'll find something to put in.
Okay,
perfect,
great.
Perfect.
So let's
back
see.
To this, yeah. So this from yesterday, a similar sort of theme that we had with Alan in terms of the first chart, in terms of going up. We've got the open, kicks off, price goes down, discovers down. We get a bit of a failure. You probably don't see it so well on this chart.
Here's the open. Okay.
Yeah. So on probably the second or first chart, you see it a little bit better in terms of the detail, but a bit like we had with Alan, price has gone down. We've got that failure, the consolidation and accumulation, as he rightly marks on his chart, and then the price starts to pick up. I'm going to lean into Laura. It's my opening range stuff again. We've gone down, we waddle around a little bit, and then the buyers come in. We can see some lovely green bars coming in on the second chart, Bruce, and off he goes. And he trades this very well. He's much more of a swing trader than a scalper. I know if Jack was with us, he'd say, again, the usual line, traders, Davey considers a swing trader anything more than, what did he say last time, Bruce? 3 or 4 minutes or something like that.
That's right.
Yeah. Yeah. But he holds this for more than 3 or 4 minutes and takes out well over 100 points out of it, I think. So yes, really, really great trading and very well charted. So not a lot else to add really onto it, Bruce. It's, I'm sorry to say that it's good trading, good simple trading on a day when the market was a real strong up day. And he had that. He had his plan laid out. He was anticipating those moves, and he executed effortlessly, superbly on it. And took money off when it got up towards upper liquidity, as you can see, around that sort of 2,800 zone.
Yeah. I mean, I love that bigger picture liquidity levels in here.
Yes.
That's really, really great stuff. I don't really have too much more to say. I mean, like,
no,
is quite beautiful here. Documentation and chart markups. He knows what he's looking for. He's marking them up, and then he's looking for and he's patient. Lets it play out. And fantastic. So, these are model kind of charts.
They are, and I love the picture-in-picture as you do. And I said that storyboard. I appreciate traders. I'm perhaps not presenting it as well as it should be presented in terms of going, this is the first chart, that's the second chart, the third chart, but that's because Bruce is the master on the chart control. We'll have to work on that, Bruce, won't we?
So maybe, sorry, I'm a little flustered here. So, but I mean, this is fantastic. So I think this is the last one here. Or the first one.
Yeah, that's the trade. That's sort of the trade window.
Yeah.
Sort of shows you, we can see how he's got in, how he's moving his stops around. Stops move down a little bit.
Yeah.
Which I'm sure, so we all do that. And then he just tracks the price up. He's taking some profits and he's moving it up and up and up. Yeah, love it.
Yeah, yeah, and even patient through the liquidity, still trailing,
Yes.
you know.
Yeah.
Really, really great. Yeah, I mean, this it's more. I think it comes back to nuances and maybe again, like pretty simple stuff, but starting to look at and understand behavior. So and not be kind of freaked out by the trade, but just kind of stepping back and going, huh, you know, every time it hits high liquidity, we typically get a pullback. And how do you want to handle that? Like, maybe you can look for a pullback, maybe there's some structure, maybe there's some liquidity, maybe there's something in there, maybe it's something technical, or maybe it's the buyers you start to look for. So Christoph, I mean, once you you could consider in the future, like you're mastering your setups here and your trade management, which is beautiful. The I especially love this one here. As soon as it starts to move away, you bring your stop up and trail it, which is fantastic to see. But some nuances in here, like you can start scaling potentially. And with moves like this, my God, I mean, you can just knock it out of the park.
Yeah.
I hope that helps.
Yeah, good tip, Bruce. Very good. Very good.
Yeah, Crash. Any comments you have? Like, since you trade the Nasdaq quite a bit. I think he's probably on the phone.
No, sorry. I took a quick phone call there. I apologize.
No, no worries. Happy to have you. So
Yeah.
I don't have anything specifically on this one. Sorry.
Okay.
I guess was that Market Pulse? Let me just ask a question. Was that Market Pulse VPI down there, the pink line, CVD? With Market Pulse VPI
on this one here,
the one you just had, yeah. That pink line, the CVD, and then green and red up and down.
Yeah, the green and red one, I can't read it. I can't see.
The green and red one looks like Market Pulse VPI with spikes, and then it looks looks like pink on the bottom is low, CVD low, and black is CVD moving up. Yeah, CVD is black on the bottom.
Yeah,
CVD.
Right.
Yeah. So I mean, look, I just love Market Pulse VPI so much. I know we have covered it quite significantly, but just look at that Market Pulse VPI spike tag in the pink down there in the bottom that you get that little V-shaped bounce.
This one here.
Well, the one where CVD is coincident with this
one
spike. Yeah, right there.
Okay. Yeah.
I mean, it looks like a continuation trade, right? I love this. You got a move up on the left, pull back to the right, and then you have a Market Pulse VPI spike, and it continues moving up to the right hand side. So, matter of fact, I'll post my last picture has a little CVD in it with the ES. But you can use Market Pulse VPI. I've been starting to play around with it with the POTI indicator as well. I'm trying to really, once I play with it a little more, I'll make some pictures of that, but trying to find confluence between the two of them. But this is so good. If you're in a range bound market, Market Pulse VPI can help you pick, like say you're in a Wyckoff box, right? And you're just going from top to bottom. It can help pick the bottom of the Wyckoff box an accumulation stage, for example. If you're doing an ABC up, I use this quite significantly. I will use the Market Pulse VPI to either start the trend of the ABC pattern up, or many times I use the Market Pulse VPI for that pullback in the middle of the ABC move up, right? A measured move, ABC up. The Market Pulse VPI, when it tags CVD down there like that, that is a money bag trade. It just is. And you can just see that picture right there. Pink on the bottom, and then black on the top over there at 1035. It rolls over. Yeah. If you have that in combination with any other points of confluence, say an iceberg surfer comes out, or want somebody's, ATR zone or a special price zone or a Fibonacci, anything where you get 2 or 3 of those points of confluence with that market pulse VPI, it is a killer trade.
Yeah.
Very nice.
Nice. I knew we brought you in for a good reason for that instruments joke.
Exactly. Not just about flying at night. Definitely.
Yeah, I mean it's incredible. Where else do you see where else do you have a combination of a tool that shows a spike coincident with the CVD? I don't know another application that shows that like this.
He might be. I think it's a liquidity tracker that he's using here, but I'm not sure. That's what it looks like. But Christophe, you'd have to let us know.
Yeah, but those are red and green and white for the differential. I don't think that's what that is.
Yeah. I don't know. So
that to me looks like a market pulse VPI spike. But either way, the point's the same because it looks the same.
Yeah. Good stuff. Another way to slice and dice it there. And especially Crashwood. I think you've probably. I know you trade the Nasdaq mostly, or a lot. And this tool, you've got a nice combo there. Like this tool and this market work really well together, because it moves so much. Do you have just any kind of insights that you have using other markets, the ES or others?
Well, I just posted. Look at the picture I just posted. That's actually the ES.
Okay. All right.
So zoom out so you can see the market pulse down at the bottom. Okay, so here's another example. On the left-hand side there towards the market open at 7 o'clock Pacific Standard Time, right?
Yeah.
Where that arrow is pointing to the VPI. You have market pulse VPI spikes that come up at a peak of the CVD. And then over there at 11 o'clock, you have the CVD that's gone down. It's circled, both spots, one circled in red and one spot circled in green. But you can use those to help find, points of confluence to enter and exit into trades. Now, I personally like it if the CVD actually changes color. So it's even stronger if you've got, the green CVD line up at the top and the yellow. That's how I have it colored. So the lows are yellow and the green is up at the top. Yeah. But just in this particular case, you can see, so I use market rotation theory, right? Cycle, predictive time and price cycle methodology. So I track like on a day-by-day basis, these intraday rotations that I follow. And this is an example of that where at around 7 o'clock in the morning, we're seeing what I call the spill up. I think I talked about this 2 weeks ago when you brought me on. And that's where you have that residual effect that comes from all the, millions of orders that have been put in right at market open or RTH. You get I have that no trade zone for about 8 minutes. And then, between 15 and 30 minutes, you have this leftover, what I call the spill. All right. It's spilling up or it's spilling down. So in this case, I'm always trying to find the spill up or the spill down, depending on the day. And I use market pulse VPI coincident with CVD to help me find this thing that occurs on a daily basis.
Nice.
So if you start watching your chart and you just listen to me and look in the first 30 minutes, all right, you will see a high or a low that usually comes in, and you might get one or two because it likes to bounce up and down during that time frame. So you might get one or two highs, one or two lows. But when you see it coincident with the CVD, you know that you've kind of peaked out for that spill one way or the other. And then I use that to help transition from what I say is the spill up to this case, the AM low, which is also a predicted type intraday turn, because we know that the market works on 4 to 6 cycles, intraday turns per day is the average. And so if you start using the market pulse VPI with CVD, you can start to identify these turns that the market has on a daily basis. So that's kind of the point of what I was trying to show in this picture right here, as far as VPI is concerned.
Beautiful. So a question for you, because like for others, um, like explain like how did you get there? Um, like did you just started to study this and you started to note these things? You started to kind of mess around with them. You started to track them. You started to trade them. Was the process kind of like this?
Yeah, sometimes you rather be lucky than good, right? And I was very fortunate to have he's passed away now, but an ex Wall Street trader that basically taught me this. And I met him in a chat room, and then we became friends. And then he would print stuff every day for me, or type stuff for me, and I tracked it for, I want to say, like 10 years, no lie. And I kept every single daily note that he wrote. And then what I did was I literally studied it, like to try to get like a PhD, right? I mean, I literally studied every single day. And what I would start to do is take what he taught me, and then I would further advance what he taught me into more specific time frames during the day. So I actually have had two different Wall Street people train me on some stuff. One actually taught me on it what I would say an intra-day cycle, but then there's also multi-day cycles. So I took the combination of what one guy taught me and what another guy taught me. I tracked it for years, and then I wrote my own pattern behavior. Like I have a 180-page PowerPoint presentation that I use for me, my own personal use, that I track rotation. So I, like, at the end of the day, I take a picture of the ES and a picture of the NQ every single day. And then at the end of the day, if I can't do it right after the market closes, I do it at night, and I do it religiously. And I have a notebook. I happen to use OneNote is what I like to use. It's my trading journal in OneNote, because I can open it on my phone or any other computer system.
Anyone you need, yeah.
Yeah. And I track it, and I have it's called Crash's Clock. It's my Navdar, that kind of saying I've coined, half navigation, half radar. And then I specifically look at the time frames that these turns occur on every single day. And after doing it year after year after year, every single day, you start to see the patterns that develop. And so that's kind of the process that's brought me to where I'm at right now.
Perfect. Love it.
So it's a lot of work. It's a lot of work.
Yeah.
But it's worth its weight in gold, because now I have a game plan. Okay, and I've explained this before too, so not everybody in here may know that. But over the last year, inside of Bookmap, I have posted multiple pictures where I look at pre-market, the liquidity zones that I see above and below where price is before the market opens. And so I take my trading journal and I say, what kind of day is today from an intraday turn point of view? And then I go and I match where I see the liquidity zones on Bookmap to try to have confluence with my coming in game plan. Now, the game plan doesn't always work, right? But as the day goes on, I have that little check box, that little checklist, and I say, in this time frame, did I find a high or a low? Did I have Market Pulse VPI and CVD giving me confluence with what I thought? And did it also match the liquidity that I found either pre-RTH or during the trading day? Because sometimes it comes in and out during the day, right? It's not always there pre-market. And you can see this example right here. Look where the spill is up, and then you follow that down to the AM low. After the spill had developed and on the way down to the low, you see that more liquidity started coming in the middle of the day there, right around the 8:40 time frame, right, where it says AM high up at the top. You can see that liquidity was not that thick to begin with initially. You probably saw a little bit pre-market, but it gets thicker and thicker as the more people start putting their orders there, right? So we've gone from the spill up down to the AM low. We bounce off of a little bit of liquidity zone. Now it starts coming in really thick, because you can tell that that's going to be a zone that's going to People are probably going to be taking profit there or whatever. And so a lot more orders start coming in at that point of entry there, or that level, and you got to decide what kind of reaction are you going to have there. And at that point, if you already think you're going to have a high in that window, I'm then looking at liquidity zones plus other ATRs, Fibonacci's. I do some GAN work as well, and so I put them all on a chart, and then I just see where the liquidity zones match with those other price targets in the cycle time frame that I'm looking for, and that's how I help take the trades. So, long-winded answer to Market Pulse VPI, but trying to just explain a little bit of how I work all of the benefits of the Bookmap order flow together.
Perfect. No, I like it. Definitely something to look at for sure. Good use. Very good use, Bruce.
Yeah, nice process. I mean, and the confluences. I know you as you said, you'd study these swings and for many years, but now you're looking at confluences to confirm those swings, and you've got something even more powerful, and you believe in it. You know it works for you, and then it's just risk management, basically.
Exactly. And then throughout the day, you can see there at the 10:15 and 11 o'clock, here's two of my favorite setups that I like that you can only get from Bookmap. When I'm coming down from an AM high, for example, and I think I'm going to be going to the next turn low, if I see where that arrow is, where we kind of trundle down there from that thick liquidity zone, and look at that green candle or green bubble that popped up there. As soon as we have that little bounce where that red arrow is with the 445 iceberg right there, look what happens. Price is coming down. We do just a little mini retrace bounce up. And as it starts to retrace from that price there, you get a iceberg surfer, as I like to call it, come out. Yep. And so as soon as you see that pop up with the surfer on the top, or the one you're doing is the exact opposite of that, price is coming down and then bounces away from that surfer. That one there, you just put the square on, short that one, and you buy the other one that you did previously. Yeah. And this happens every single day, practically, on the ES with Bookmap.
Wow. Yeah. Nice stuff.
Every single day.
Yeah. And then now you're bringing in Pace of Tape as well. Checking that out. Yeah.
Still learning that one a little bit.
Yeah. It's an interesting one. A lot of times you'll see the frenzy pick up before the price starts moving. But the back and forth. But anyway.
Well, something I'm looking at, and you can look at this yourself as you play around with it. But when I see the lines merging, like Market Pulse VPI and the point of what do we call it? The point of tape indicator?
Point of control, or
what's POTI stand for?
Pace of tape.
Pace. Sorry, forgetting the word there. When you see the Market Pulse VPI line and the pace line both turn the same color, like both or whatever color mix you match, whatever I can't even speak today. Whatever colors you pick to have it match on your screen, whatever bull for VPI and is bull for POTI, when they merge together, that starts telling me I'm having a strong move in one direction. So I'm starting to look at that just a little bit to see if I can see kind of a power move happening when they start merging together. But again, I'm just playing with it at this point in time.
Yeah, beautiful.
No, very, very, very nice. I like it. I like it a lot. Yeah, good stuff, Crash. Very, very good stuff.
Thank you.
Yeah. Thanks, Crash. Yeah. So let's see. Should we go back to Christoph here?
Those are the three charts.
Did we finish?
We sort of finished him. I think we did. Yeah, we finished him. So it was great trading, mate. Really nice charting. And by him as well. So those three. Okay,
and CMJ is not here, so
not here. So we could maybe do him later, so to speak, or
get
someone who's here.
Yeah, maybe. So Sijoto is not here either. John. So I think we went over you before, but there's some beautiful stuff in here. John, once you, if you're,
Today, nice one.
did he just leave? Oh my God, that's bad luck. Yeah. Anyway, yeah, he showed some, just today. I mean, look at this high liquidity in here, and I mean, just you can't make this stuff up.
No, you can't. No.
You know, and beautiful stuff. I mean, here again, like we've got, he looks at, like you, David, the option stuff and combining it
He
with
does.
liquidity
He
levels.
does. Yeah, very much. Yeah, it's great trading by John, for sure. He's a big proponent of the Bookmap in the spot gamma room. That's for sure, Bruce. That's for sure.
Yeah, well, I mean, maybe you want to go through it because you're more familiar with his trading than I.
Yeah, well, if I can find, if I can perhaps go and get the Tesla chart off, that will give us a bit of context. If you can ramble for a moment, Bruce, I'll find that chart and
All right.
I'll put the meta one up as well. We were talking about that, weren't we? Let me do the meta one. I know that's not his trade, but that will give you an idea.
I got a few here also from the ES that
Okay.
we can go over a bit. But I mean, it's just beautiful stuff here. I mean, look at this high liquidity in here. We're this is before we hit the 6,000. And the liquidity pulling. So I mean, this looks like a really kind of big spoof type of thing, but not too effective. If it was a spoof, you can see the market just started to. Maybe it was effective enough. Maybe I'm wrong. It's always kind of hard to read that. I mean, if the game was to show some high liquidity in here and maybe get price to come back down a little bit lower, then well done. Because it did hit this level down here, and we start to see the move back up, and then all of these pull. He's got I don't know if this is the liquidity tracker on the chart here, but or not the liquidity tracker, liquidity marker, and it might be though, and it's showing the plus 100, minus 100. Clearly a larger player doing this over some time. Anyway, nice pretty stuff good. There. This is where he's reading it here, and then we see the continuation, but he's getting in long here after seeing this, and first target, second target, and like Crash was saying before, we didn't cover it today, but he's got his way of trading, but then he's got his way of managing. And that is a beautiful thing because of the, he'll throw in a few small positions right at the very bottom. He's got some leeway now to play with. This is something we've covered in more in depth, I think, the last couple of meetings, which I think is so critically important. The way, we talked about how John, how you, David, how now Crash, and there was someone else in there too, like how you're managing the money and the trades and paying yourself along the way. Fantastic.
And having fun, that's the thing. He says having a bit of fun with it. So yeah. If we perhaps go back to the Tesla chart, please, Bruce.
Yeah.
I think it was the first chart. So this is from today, isn't it? And this is from the opening bell. In the chat, I've put two spot gamma charts. The second one is the Tesla chart.
Okay.
And so where John's first point, hero showing positive. So you got Meta, and the second one was Tesla.
Okay.
Second. There. So the pink bad circle I've got. So he's saying Tesla's positive. So if we just focus on that, so this is obviously New York time. You can see when it's open. You've got the orange line, which is the call.
I'm sorry, which chart?
The spot gamma one. Sorry, my
Okay.
bad.
This
Spot
one.
gamma one.
Okay.
Yes, yeah. So if you look at within the pink circle, and you'll see the orangish line, that is the call options that are going through. So John is saying there, the first point he's saying is the hero, this is a hero chart, is positive. You can see the orange line is ahead of the price. It's in the first sort of 30 minutes, Bruce, 30 plus minutes. It's very, very clear that the market, if I use the word the market, is buying heavily, is buying call options on Tesla. And as we all know, as we all understand, if people are buying call options, then for the hedging of the dealers and everything else, then they've got to go and buy the equities. So that's his first fundamental key he's seeing there, is that options going up. Right, okay, he's looking at Bookmap, he's seeing those liquidity levels, and he's seeing a trade. Quite a straightforward trade. Not always, as we'll always say, but like something like that could be a little bit like Crash was talking about, slam dunk. And if we look at the first chart, Bruce, that I put in the chat, which is the meta chart, so I appreciate John didn't have that charted, but the meta spot gamma chart, which is horrendous. If you look at that one there, you can see that's even clearer, isn't it, on the left?
Yeah.
You can, it's just so clear. And if you look at the number, I appreciate it's all a little bit small, but the hero for the day when I took this was 828 million. The daily average for the 30-day range is 482. So when you saw that orange massive spike up really early on, more likely than not, Meta was going to be higher by the closing bell than the opening bell. Now, I know that's really broad, Bruce, and that's dangerous and all those other things in between, but that's what John is using. He's looking at that, where we are to start with on Hero. He's looking at one or two other things within Spot Gamma. He's looking at the excellent takeaways we can get off Bookmap and trading accordingly.
Question on this though, like I follow you on this part here.
Yeah.
But what about I don't follow you here. Like so.
Yes.
So what's going on?
Yeah. So how I always take that like an ECG, like a heart rate. So the spike's gone up and the buying's gone out, and then it's just resting back down. When that comes back down, I sort of ignore it. Now other people won't. I sort of ignore it in terms of that's just, I say that the 180 to the heartbeat. What I'm then looking at when that comes back down is that where it says current hero. Of course, this is a shot at the end of the day. So at that moment in time, I'll be seeing if current hero, which is on the right-hand side, just above 30-day range. Just a little bit up.
I'm sorry. Oh, here we go. Yeah.
Yeah. So where you get that pull back, that heartbeat, I'm then looking at what current hero is. Is it still positive? Is it still growing? I'm mentally remembering what the number is. Are we going up or are we going down? And I think there's one or two traders in here also in the room that where I see that building, let's say positively, and I'm long, or I'm looking to go long, or I'm looking to add, that's more confidence for me. If that's a sort of long-winded answer to that, up and down. So short answer, I ignore the pullback on the orange line unless the current hero is becoming particularly adverse to the direction that I'm trading. Now, sure, Brent would have a different view on that. Jack would have a different view on that. A little bit more color on this one. I run these hero charts time-based, and I run this either at a 15-minute window, Bruce, or a 30-minute window. This one is at a 30-minute. Now, Jack never looks at something as fast as that. This is back to in a tongue-in-cheek regarding swing trading and scalping. Jack often runs this at 1 day. The charts can look quite similar, but basically, I'm pulling in a shorter amount of data to give me more nuanced moves on the options market compared to Jack. But my excuse on that, I'd be interested to know what John actually uses. My excuse on that is as you know, Jack is more, when he's using this, he's trading options more than the actual underlying equities. Whereas me, I'm like John, I'm doing the underlying equities.
Right. Okay. Well, I mean, he is certainly,
Smashing it.
yeah, just smashing it. And I mean, a beautiful kind of, it's a beautiful chart. And he's got his call wall like, I don't know, 45, 400,
Yep.
and Jesus, how many? Is that like 500,000 shares up there almost? Like, yeah.
You caught me out. You spotted me, Bruce. Down. Yeah.
I mean, that's amazing.
Yeah.
And so price continues to go up into all of these areas here, and I'm imagining this traded, but anyway, I mean, beautiful notations. He's got it all aligned here, so he's got it marked up here, and it aligns with his checklist. Wonderful stuff.
Sure. If I quickly answer DNT, how I read it, how I always read this thing. So the orange lines, Bruce, on the spot gamma. If the orange line is going up, then people are getting into calls. If the blue line is going down, people are getting into puts. Where I'll say it politely, I can get confused and other people get confused is because often, if I say Brent or Matt, they'll also be talking about the dealer position, which is clearly opposite. If retailers are getting into call options, then that means dealers are selling call options, and then that whole conversation can get a little bit, my head hurts, so to speak. So I just see this is how I read this as a long answer, Orange is going up, so that means people are getting into calls. That means people are the hedging, they've got to start buying the equities, and vice versa when the blue line's going down. There's another spot gamma chart, which is this trace chart, Bruce, which I don't know if we've had to. You had a session, didn't you, with Brent on that?
We did.
Yeah, and that's the dealer position. So that's even more confusing because this is looking more at the retail position. The other one's looking, because this comes from Opera, the other one's looking at the dealer position. Anyway,
right.
This is about Bookmap, David. Stop it.
Yeah. But again, like what Crash was looking at, or confluences, and being able to kind of put that into the bigger picture here with the order flow.
That's it. Yeah. Very, very.
And that's where the edge is. And this was played just really nicely. Good stuff there.
Beautiful trading, my chum. Beautiful.
Yeah. Let's see. Else. See, we went over Alan. We went over Christoph. Sajotto, no. And then through this ES, we went over Crash. Went over John. And let's see. There are a few more, but I mean, I know that this was. Okay, we do have Malak in here. So, right? I don't see an image though. Yeah. But Malek is in here, so it would be nice to go over. But I do not see an image. This is Sajotto, I believe. All right. Well, let's see. I think that is. Is that everybody that we had? Hold on a minute.
We've got Malik on the mic. Is he the doctor? He'll tell me in a minute.
No. I forget. There's the other guy.
No, definitely not.
Definitely not. My bad. Sorry.
Hello, everyone. Hello.
Good evening. Good afternoon.
Yeah, let's let me see if we can pull something up from you here. Do you have your spreadsheet, Malek?
I could open my spreadsheet, or I have the It's 11/01/2024, right? That's the
Take a
date
look.
you were talking about. That doesn't have a picture.
Okay, so maybe I can find it here in Academy. Okay. Oh, thanks, Dan. However, I don't have a link to it. Okay, now I got a link here to some YouTube though. It's kind of odd. All right. So let's see here. Oh, okay, I got something here. Okay, so we can take a look at this one. Yeah, and why don't you kind of walk us through a little bit? You've got all sorts of strategies in VWAP. I know that you're looking at, but just maybe cover the kind of the basics of what you're looking at.
Okay. So this was a Black Sun strategy. It's just an observation. I didn't really take this trade. So this is our 1 weekly floor pivot, right? So I kind of outlined that right there, weekly pivot R1. Oh, I actually misspelled it, my bad. So that red rectangle going across there, that's the weekly R1 level, right?
Mm-hmm.
And this yellow dashed line, that's the first VWAP upper deviation. It's anchored from the RTH open. So basically my strategy is just taking breakdowns of a pivot level, most likely a resistance pivot level like a R1 level or a Camarilla R4 or R3. And when it coincides with a breakdown of like a second upper deviation or first upper deviation, that's how I take my trades. It's a breakdown, sometimes like a retest or maybe just a breakdown. It depends on how the market is moving. So in this picture here, I would have taken, let's see, I think it's around 1033 when it breaks down. Yeah. So when it breaks down, we get several retests, right? Now I usually use a 2-point stop. So if I don't trail my stop, this trade would stay in profit or stay valid until we get to the take profit of like 10 points. So if I take the breakdown of the dash yellow line, which is the first upper deviation at the floor pivot R1 weekly level, um, my stop loss would be 2 points up from that, and then I could just wait until I take profit, or I could trail my stop as like let's see, I think at 1036 when we get that pullback there, I could trail my stop to that level and secure profit, or I could use my trail and stop, which is 12 ticks. So within this market environment right now, I'm using a 12 tick trail and stop. So oh, and another thing in my strategy, I take profit at 4 points. So if I take the breakdown of the first upper deviation, when it gets to 4 points, I take off one contract and I let the other one run. And the other one is running with a trailing stop of 12 ticks. And I just did that because the market is kind of volatile right now. So I use Apex, so I have to cater for the drawdown. So that's the Blackstone strategy basically. And then I use like these market pulse VPI and VP at the bottom here to see when volume is actually supporting the price as well, right? So this orange line at the bottom here, like when we're breaking down in the first white rectangle right there, right? We start getting a spike down in the VP and VPI, right? So the VP, I believe, is the purplish line, and the VPI is the orange going into burgundy. Yeah, right. So that's the market pulse supporting the trade, and the buy side of that for the VP is like the blue line, and the green line moving up. So when it starts to reverse, you see there's a spike right there from the buyers coming in, right? So this is another kind of confluence to the trade working out, because if we're getting spikes from the buyers, but we don't get follow through above the first upper deviation and the weekly R1, then we're most likely we're gonna just break down after that as well. So this trade was like about 10 points, because I believe it's like a 59.32 entry or 59.33 entry. And I think price gets down to like about 59.20 or something like that. So it's like a 10-12 point trade.
Yeah, nice. Let's see. Before I turn it over to you, David, we've got Valefan in here, and Valefan, if you want to join in, since you trade pivots,
Definitely.
Yeah, he's the
let's-
Camarilla expert. Yeah.
exactly.
Yeah,
Let's
yeah.
invite him up. And David, catch me.
I will, thank you. Just a couple of comments. Yeah, no, nice charting, really good, and I can see the chat. Everyone's loving your videos, which is fantastic. The thing
Oh,
I
that's
like
cool.
about
Thank
these sort of trades is it's back to those checklists, Bruce. It's a really defined set of criteria that you're looking to see tick, 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 and then you're committing. I love hearing that where you've got your mindset in terms of, you know, I've got my stop at 3 points or 2 points. You've got your take profit at 4 points or 3 points. You've got it all worked out. So you're executing with absolute precision. That's fantastic. I love it. I love it, Bruce. Love it.
Thank you. Thank you.
Oh, welcome. Mr. Valefan, sir.
Hey, what's up?
How's it going, buddy?
How are you? Good.
Good.
I'm in my garage working on my truck listening to you guys. I got to get it shipped down to Denver to get work done on Monday. And that's been the other thing that's been taking up all my time, rebuilding it. This is nice. I like this. I like comes underneath the level and then retests. Is that the absorption indicator there? It's right in
Yeah.
the middle of that second box. Yeah, that's nice. You get that nice confluence right there with that. It's a third rejection. Yeah.
Yeah.
So I mean, 3 is pretty good.
Yeah.
I was my bookmap class with Bear Bull traders. I was trying to take up some live entries yesterday when we had the class, and I think I can't remember the stock we were looking at, but it just kept continuing higher. It was just trending higher. It was coin, and coin had just skyrocketed. And I was like, well, we'll look at this next dollar level, and we would get a test. I was like, okay, it's strong, so I want to retest.
Yeah.
And then on those retests, it just blew through the level.
Bang.
So you're like, okay. We started talking about patience and being stubborn, with your entries and your trades. Don't get sucked in by the market. Let it tell you, to start looking for this, especially on reversals. And never did get a chance. Like every time it tested a level, and then it finally got up pretty high, I think around 255. And I was like, all right, we'll try it one more time before we all have to get out of here. And I was like, this time I want 3 tests. I was like, we've had a couple where, we got the reaction we wanted. We saw the price level, but this time, I want 3 tests. And, you got it on this one. So I love that absorption right there, right at the level. Like that's great stuff. But,
Yeah.
being patient on
So-
these, you have to be patient.
Yeah.
And if it doesn't look like it's ready, then be stubborn and don't let
But,
the market like reel you in, because it'll do it. It'll give you signals sometimes and you want to jump on, but you just have to
Yeah.
have that like little bit
That's
of
the question I want to ask you, right? How do you define when you're getting sucked in, or when it's actual, just like how many times would I have to wait for this retest? Because like I didn't take this trade, right? But I might have took it at the first white rectangle, right? And obviously it went down a little bit. It might have, I don't think it hit 4 points, almost 4 points. So I might not have gotten the first target, and then it would pull back to my entry. So should I just should I exit the trade and wait for it to come back to the entry level, or should I just wait and let it retest? Because now I have this trailing stop. It might stop me out, right? So I'm trying to kind of figure out which is the best approach. Should I wait for 3 retests, or one retest, or
Like on a stock you've been watching or a future or whatever you're trading, if it's trending strong, like we've just had so many like really strong trending days, those are the days I don't do as well because I'm looking more for the range and trying to trade the range. So on strong trendy days, I can really struggle. But
same here.
you have to know the kind of price action you're getting. It's really strong. I'm seeing nothing but green bubbles. We're hitting levels. I'm seeing a little bit of selling and a little reaction. But man, this thing's strong. What am I seeing and being objective with that? And then just waiting for those signals. And if it's blowing by levels and it's not respecting your levels at all, then just be more stubborn and patient and say, well, this time then I got 2 tests on the last one, it failed, 2 tests on the next one, it failed. And I need 3 tests on this one to convince me because I've seen this before.
Okay.
And but if you're already in, do you know where your stop was here? Like, so you put it in and then you just put in a trailing stop for the trade?
So this is just an observation. I didn't take this trade because I didn't want to trade with like FOMC and election going on. So I was
I
just
felt the
observing.
same way. I was very cautious the last couple of days.
Yeah. So, but the stop loss would be 2.25, 9 ticks. It would be 9 ticks from the entry, and the entry would be around, I think, 59.3275. Right.
That's a good entry.
Yeah.
I would try this for a little bit. Try to just go for a hard stop.
Right.
So,
right.
and then once you get, I wait for 2R. I try to wait for 2R from my stop. My stop's 1R and then 2R past that. So 2 times past my stop to try to look for profit. I try to look for liquidity there. Try putting in a hard stop until you see it getting and interacting with liquidity. And around that area, let it extend back and then come back and test that area, then put in your trailing stop.
Okay.
So give it some room to breathe and pay attention to the price action and just watch it. But don't be afraid to just put the stop in, hard stop, and watch the trade and stay in. Don't worry about, I'm going to get out now and then I'm going to get back in if it comes in and retest. Just
So
get your entries down, set it in, and just start watching.
So is there a way to do that on Bookmap? Because I believe you have to have your trailing stop in before the trade happens, or like if it's just a hard stop, could I switch it over to a trailing stop after that?
Good question, Bruce.
I'm sorry. So say again, if you're trailing your
So,
stop and you want to do what?
If I have a bracket order, right?
Yeah.
So it's it's 9 ticks stop, and it's a what is it again? It's 4 points first partial, and 10 points as the all out, right? Now I have it at 12 ticks trailing, right? So that's the setup. I enter the trade. Or let's say scratch that. If I have a 9 tick stop and 4 points partial and 10 points for the second for the all out, right? Could I then switch it over to a trailing stop?
Yeah, sure. I mean, what you need to do is cancel all open orders,
Right.
set an OCO with the trailing stop. Make sure see if you can check the box for the trailing stop. It should.
So I would have to disable multi brackets, right? Because that's how I have my stuff set up.
Yeah, I believe. I mean, it should work for you if you use that OCO. I'm not sure actually if that will work or not. You might have to manually.
I think I might have to disable the multi brackets because if I put in more,
you would use OCO.
Right. Okay.
But I'm not sure
right,
if it will trail on OCO. In fact, let me see if I can answer that question here right now. So we're in let's say we're market's closed.
Yeah.
Okay. I will try to answer it tomorrow for you.
Okay. Thank you.
Yeah.
Because that's a good idea, Valifan. If I see certain retests, then I could, if it starts going in my direction after the retest, then I could start trailing. So that's good advice. Thank you.
Yeah. Anything else, guys? David, Crash, I don't know if
No,
Valley
not for
fan,
me.
anything come to mind here?
Nothing further. Nice chatting. Really is.
Thank
Really
you.
nice.
Thank you
Really
very
nice.
much.
No, it's good to see, sir. Good use of the tools for sure, Bruce.
Yep, I agree.
Let's see. I'm just kind of curious, Crash. What do you think about or how would you manage your stops and well, in your trade on the ES? I imagine it's going to be, you're going to try to make it as similar as you can as the NQ, but you probably can't get away with that.
Yeah, it's a little different. Depending on what level. So there's some levels that are, I guess, higher percentage, right? Efficacy of what the reaction is going to be. And then if I get multiple points of confluence that's coming in, I can use a much smaller trade. I'm currently have been trying to use as much as possible 5 to 12 points max on the NQ, and I can pretty much use 5 points on the ES for sure.
Okay.
Right.
Yeah, let's see. All right. Well, Valley fan, actually, I had a video from you. If you want to walk us through that, and since we haven't had you for a while, I do have a couple comments here on this one. Malek, you may consider, like, I think there's a lot of things in here. You're kind of, I think what is really good, what you've got going here, let's call it your superpower, is you are noticing the higher time frame stuff, and understanding price action within that higher time frame stuff. That's good. Then now I would say, like, the next step would be start to notice volume and start to notice liquidity. These things are, well, let's put it this way. The price action and the higher time frame stuff is good, and to have that study. It is the market needs orders to trade. So it is the order flow that is going to affect the market. And that's what Bookmap is really good at, is showing you, for example, these levels of liquidity. This is why you got that third bounce here. Starting to understand this context of liquidity again, and now you've got something to mix together with your higher time frame. So continue on with don't break your studies and your strategies here. But I think, as some of the other content that we've gone through for some of the other traders, how they have integrated in within their checklist the liquidity and volume in the price action. Because, I mean, you can see it in here. There's just, all sorts of stuff it's trading into. There's a flip of the book down here, and it's telling us something. Yeah, if maybe consider start to mark up some of those areas in here, it might be helpful.
Yes, definitely. And some of my other markups, they have liquidity markups and volume as well, because I do subscribe to volume price analysis, like Anna Cooling's teachings and stuff. So I do point out the volume bars at the bottom there, and also the liquidity. And it's incorporated in, I believe it's the picture is on 11/04/2024, where I actually put my checklist in there, and it has
Great.
passive orders in there and stuff like that.
Okay.
So yeah.
Okay. Perfect. I know I've seen it from you. I just didn't see it on this chart.
Yeah.
All right. So let's see. Valley fan, we'll go over a video that you got and take it away.
Last time Jack had me on, he was just talking about being zoning or zooming in a little bit more to price action. And so, and explaining what's going on rather than showing my whole trade and zooming out. So just a nice little video of a textbook entry for me. Came down to the cam, touched my cam just like I like. I want the touch of at least that exact level on the cam. And then I want some sort of pivot candle. So I'm just being patient right here. I like the tail on that candle just before that last red candle right before. Yeah. And then I got that pinhead candle right after, closed above my cam line. And so I was just waiting for a new high.
Yeah.
And then take the entry and put the stop in and just manage the trade from there.
Beautiful.
Yeah. Nice. You also got, you got your high liquidity in some of these areas as well. I think a real big suggestion for you, try
Trader Map Lite.
Try to Trader Map Lite. Yeah.
Yeah.
Yeah. I think you'll find it helpful.
I don't know why I haven't
Pro.
had it on there in a while. I've usually had it on there most of the time, but just for some reason, the last few times I've gone through just setting up my chart for ES and NQ, I haven't put it back on there.
Yeah. And, since it's MBO data, you got to do it kind of early. So when you start your day, you got to get in there and start it up, because you can see here, like on mine, bring it up. So, I start my day, what is it, like around 6:30 or so here. But if you look at the regular ES chart, I can put in some historical data, and I can see a little bit more. Anyway, for the first little bit, it's kind of hard to, it might be kind of hard to read, but after you get a little bit of data in here, it's great. God, there's some really good stuff in today. I mean, look at this. Just can't make this stuff up.
Beautiful.
Okay. I'm sorry, Valifan, I kind of interrupted you. What else anything else you're looking for? Or was that it? I mean, it's pretty simple, straightforward checklist you just went through. Oh, you're muted, Valifan. Oh, we lost him.
Oh, is that better?
There you are.
Much better. Much better.
Sorry. Alarm keeps going off on my phone. I think it's disconnecting my headset. But I mean, this is textbook. I didn't take the entry there before that was just above the cam level. I want the cam level to be touched. That's the first thing on my checklist I need.
Yeah.
And then after that, it's pretty simple, and just watching price action and just going through doing the same thing over and over, the same entries, and being consistent, and then looking back on those and see if I need to change something. Do I need to make adjustments? But just being consistent, especially on the entry. That's the most important part, trading cams.
So a question on your cam strategy, though, because I know you went over it in detail, I don't know, a couple times ago. Here you got your S2, right? Now, you wouldn't have gotten in. I understand that. But what about here?
It's too far away from S3 up the cam. That's just trading Thor's system and trading it for so long now. That's just where I take my entry. It's my where. So I don't trade the twos.
It has to be right around, the pivot has to be here. If it goes through on strong volume or something like this, you don't care. It's like, no, I want it right at the cam.
But I like what happened there, because we were picking up some buying. You see that Thor likes to talk about it as the ship needs to start turning. You need to turn the rudder.
Yeah.
So we're coming into S3, and now we get a big rudder turn.
Yeah.
We get some buying that actually moves the stock back up this time. So now we're coming back around, and I'm looking for that next turn and to get on that next turn and then follow downstream.
Yeah.
Hopefully to my targets.
Yeah. Yeah. No, great. Simple, effective, beautiful.
Yep, echo that.
Yeah. So, guys, I mean, any other comments? I mean, that's all. I mean, there's nothing I can comment on Valefan except for Trader Map Pro. That was my best comment.
Yeah, it just be like, and I try to tell all traders and everybody, like, just be consistent and then see what you need to change. And, this is from, thousands of entries off can levels,
Yeah.
to just, I know what I need to see. I know what I need to see. And,
Mhm.
and I know waiting for it is what I need to do. And
Yeah.
so
Yeah.
repetition, good practice.
It is.
Perfect practice makes perfect.
Yeah, great stuff, guys. Let's end it on that. Some of you in here, Mr. No Luck, great to see you in here. We'll go over your stuff
Definitely.
next time. I'm sorry we didn't have you on the list today to go through. And then let's see, Caesar, Stephen, Rob. We went over your stuff in detail last time. Hector, still waiting for your spreadsheet and some content and others as well. But guys, any let Crash, Valefan, David have the last words here.
I think I'm going to hand it over to the pilot.
I hope everybody survived this week. This has been my first presidential election to trade, so
Okay.
I've been so cautious. Interesting.
Fantastic. Well done, Evan.
All right, guys. Well then, thanks everyone for coming. Thanks Crash. Thanks Valefan, David, and Oh, we got Crash on the line now.
No, I was just saying. Sorry, I was talking, but it was on mute. No, thanks. It's good. Good lessons from everybody. Nice video, Valefan, and
Definitely.
Thank you.
thanks, Dan, David.
Yeah,
and,
I love your stuff too, Crash. I really like how you go through your trades, your whole thought process and stuff. It seems similar to mine of check.
Nice.
So
Nice.
Yeah, it's awesome. Love this room. Thanks, guys. Have a good
It
night.
is. Great community. Have a nice weekend, everyone. Take care. Cheers, guys. Thanks,
Bruce.
Bruce.
Thanks,
Cheers.
David.
Bye-bye. Bye-bye. Thanks all. Bye-bye.